Welcome back to AM Agenda. The RBA is preparing to raise interest rates tomorrow, and the consensus from economists is rates will increase by another 50 basis points. Joining me now is our business reporter, Edward Boyd. There are fears, though, Ed, that a sharp increase in rates again could lead to recession.
We know it takes about 3 months for an interest rate increase to start affecting those people that are repaying their mortgages, and obviously the amount of money people are putting on their mortgages keeps going up and up each month. And a lot of economists think the pinch is really going to come in the first quarter of next year. We have seen retail spending setting records every month over the last 8 or 9 months, and that's going to come to an end really soon when people have to start prioritising putting money onto their mortgages. So we're expecting a bit of a slowdown in the economy due to the sharp increase that we've had this year in interest rates. The cash rate at the moment is at 2.35%, and about 80% of economists expect 50 basis points will be added to that tomorrow. So we'll have the cash rate at 2.85% by tomorrow afternoon, and then probably getting to 3.1% by the end of this year. And there's a bunch of economists out there that think it could even get as high as 4.5% by the middle of next year. So there's a couple of things that are happening as well. People are on fixed mortgages at particularly low rates. They're going to be finishing up over the next year or so. They're going to have to reprice those mortgages at much higher rates. That's one of the fears around the whole housing market and the fall we've seen in house prices over the last couple of months as well. So it's all going to come to a head early next year.
Okay, let's talk about the stock market. It has just opened here in Australia. Almost afraid to ask, how did it open today? How's it looking?
Look, it's actually looking pretty good at the moment. It's up 0.4%, but it's muted trading today because there are a lot of states around Australia that are in a public holiday. The market is still open today, though, so there's going to be a bit of a low amount of investor activity, and we've had some pretty tough performances from US stocks over the last couple of weeks, and it's affected our market as well. So the ASX 200, it's down about 13% in the year to date. So it's had a pretty tough year, particularly the last 2.5 months is when it's really done a nosedive. So hopefully it starts to pick up again, but there is a lot of economic uncertainty around there, and I think there's going to be a lot of pressure on shares probably until the first quarter of next year, when that could be when the market bottoms out and then starts to pick up as we go into 2023.
Okay, Ed, thank you.